Joining me now, Kevin Simpson, CIO and founder of Capital Wealth Planning, UNH, a top holding of his, as it has been for the last decade, right, Kev?
Yeah, can you believe that, Scott? I woke up this morning.
Why have you held it in such high esteem?
Well, it's performed really, really well, but it wasn't until this morning that I realized that we haven't sold this position in over a decade. And I was thinking of the Warren Buffett quote that if you can't intend to own something for 10 years, you shouldn't try owning it for 10 minutes. But literally, we've had this in the portfolio for that long. And this is the 21st out of the 23 quarters where they beat top line, bottom line, and they've raised guidance. You see a little bit of a sell-off here today, which is, I think, to be expected because, to your point, it's been on fire so far this month. It was up 11% just in the month of April so far. So I think we're seeing a little bit of sell the news, and that's understandable.
What jump starts it again, I tried to say?
Well, the problem with this whole repricing about Medicare Part C and this idea that they're going to have to change some of their reimbursements was problematic for a 12-month possibility. And now that they're able to kind of wash this into their earnings over a 3-year period, I think that in and of itself did jumpstart it, because if we go back to January of this year, the stock was down 10% to start the year. So we saw that jumpstart. This earnings report is kind of ho-hum because they do it so often. But I think it's a stock that absolutely deserves to be a core holding as it is today for us, as it was 10 years ago. And I'm anxious for us to be sitting here 10 years into the future and seeing if it still is.
You added to your Apple position. I want to take that one next. Why'd you do it here?
Well, it had a little bit of a pullback earlier in the week. You know, unlike United Healthcare, we've sold Apple 8 times out of the entire position over the past decade. Most recently, it was about 6 weeks ago where we had removed it, and we've been working our way back in. And like anything else, when we talk about position sizing, I think that's an important conversation to have. We want to build that position back up into Apple, which we're doing. And it's not like we've never sold a share of United Healthcare over the past 10 years, but we look at position sizing as about 5% per position because we're looking at everything through a risk management lens. So we're building up the Apple position, building that back to 5%. And over the past 10 years, anytime United Healthcare became a 7 or 8% weighting, we would trim it. We would sell into strength, rebalance back down to the 5% target. So constantly we're taking profits in the position. But I think it's a good lesson on active management. It doesn't mean we have to be trading all the time like we are with Apple, but we can hold a position for a really long time and take profits along the way.
I understand, but I do find it interesting that, you know, for a stock that's up better than 20% and decidedly so to start the year, that it just takes a mild pullback for you to want to buy more, essentially suggesting that you don't think that technology as a group, certainly as it relates to mega caps, are going to have a sizable correction because you would have just waited and bought it lower.
Well, I still have some dry powder. We've got 11% cash. If it goes down, we'll always buy more. But yeah, the thesis for the tech names, looking at what happened in 2022, you have a NASDAQ that sold off so dramatically that as good as some of these numbers look, and now some of them are, you know, completely outstanding to start 2023, but over a longer term lens, and that's how I try to look at everything, is over a longer term lens, that these things are absolutely opportunities to add to them. They're long-term buys, and we expect a lot out of them. So I don't know that the markets in general have a whole lot of upside left in them, but I think there are opportunities within any market where we can look to build out positions. And Apple's still not a full position. We've got plenty of cash to continue to add to it. But I don't want to be the guy waiting and missing the boat, that's for sure.
Speaking of building out positions, Lockheed, quickly before I go, you added to that one too.
Defensive name, strong dividend growth, and with any geopolitical risk, owning a defense company, not just for defensive measures, but owning a company in this space, I think makes sense. We've owned it for a while, and we just build out a little bit more. Again, looking to build cash-on-cash positions. They earn money, they pay dividends, they increase their dividends. That's what we want to see in a stock, especially if we're in an economic slowdown.
All right, good stuff, Kev. As always, thank you, Kevin Simpson. Have a good weekend. We'll see you soon.